Welcome to the Risk Mitigation and Security for Blockchain and Digital Assets panel. I'm Emma Joyce from Global Digital Finance, and I'm with four distinguished guests today. I'll ask them to introduce themselves very shortly, who will be looking at the different risk-related concerns facing blockchain and digital assets, how organizations and individuals can prepare for these risks, what tools and solutions are out there to help, and also where regulation may fit in. I'm going to start by asking all panelists to introduce themselves. So, Jyoti, are you okay to start, please?
Yes, of course. First of all, thank you for having me on this panel. It's a pleasure being here. My name is Jyoti Ponnapalli, and I'm a director and a distributed ledger technologies lead at the Operations and Technology Risk Team at the Depository Trust and Clearing Corporation, also known as DTCC. We are a premier post-trade market infrastructure for the global financial services industry. And we have about more than 45 years of experience around the world, and we centralize, automate, and standardize the processing of the financial transactions across the trade life cycle, thus mitigating risk for thousands of financial institutions worldwide. Again, thank you for having me.
Fantastic, thank you. And James?
Sure. Hi, everyone. My name is James Loperfido. I'm currently Director of Business Development at a Swiss digital asset infrastructure company called Tangem. Previously to that, I worked for a development company called Sortmitsu, which was working on National Bank of Cambodia's central bank digital currency project, as well as other crypto-related developments, and have been working in the business development capacity in the digital asset and decentralization space for the past 4 years, and have been working with the Global Blockchain Business Council, serving as the co-chair for the Digital Identity Working Group for the recent Global Standards Mapping Initiative 2.0. That's a quick summary.
Thank you, James. And Jay?
Hi all, Jay Gdansky here. I'm the CEO and founder of Evertas. We were the first crypto and blockchain insurance company, started in 2017, and recently became a Lloyd's cover holder and MGA holder, an MGA partner of Realm. And we've been kind of maniacally focused on the issues of how do you actually create a viable insurance market for the digital asset, blockchain, and cryptocurrency space. We also got approval in 2018 for a Class 3A license in Bermuda, which is the first, that would have made us the first digital asset insurance company to get regulatory approval to operate.
Thank you. And Nikos?
My name is Nikos Andrikogiannopoulos. I'm the founder and CEO of Metrika. Metrika is the leading company in operational intelligence and monitoring. My background is I did my graduate studies at MIT. I got 2 degrees in data communications and business from MIT, and then I spent a decade in telecommunications, working for some of the largest telecom providers in the world. I think owing to that background, I very quickly realized that blockchain networks will require reliability, will require performance, and all of that needs to be built. So I started Metrika a couple of years ago, and we've been extremely blessed to be at the center of the ecosystems, working with some of the best protocol teams in the world on making our tools available to the blockchain ecosystems. We provide those tools so that you can have deep visibility, you can have monitoring, you can have operational intelligence, so that we can maximize the performance and reliability on those networks. Thank you for having me on.
Thank you. So to start with, and this is a question for each panelist, what are some of the security and risk-related concerns facing the blockchain and digital asset ecosystem that you see? Nikos, can I start with you?
Absolutely. On our side, we take a very kind of related perspective to what we do, which comes back to the data communications. What we analyze and provide tools for is operational risk. And when I talk about operational risk, I mean nodes going down, networks having issues, nodes not voting or accounts not voted, wrong configurations, latencies, applications on top of those nodes having issues with the API, transactions being rejected, all of the issues that one would expect that in a blockchain network carrying so much value on top of it, or having critical applications performing on top of it, would have a very high level of service assurance. So one of the main kind of risks that we see is that there is certain operational risk when you run any kind of operations on top of a blockchain network. And you need to have the right tools, you need to have the right processes, you need to have the expertise, and obviously the operational handbooks and operational governance, either in consortiums or open blockchain networks, so that you can maximize the reliability and performance of those operations. So that's a risk that traditionally exists in all kind of the data communications networks and applications, but it gets mitigated gradually as more infrastructure gets built, as people become more experts in the network, and as things advance and mature in the market.
Excellent, thank you. And Jay, what concerns do you see?
We take a slightly unique approach because as insurers, we are potentially on the risk for pretty much the full spectrum of risks. And as a result, we kind of look at, let's say, everything from, physical security to personnel security for individual groups. So how do you prevent coercion or, any sort of kind of, forced kind of transferring of funds, to a lot of focuses on processes and development, to geographical redundancy, resiliency, preparation for natural disasters and things like that. And so, what's interesting is there's always a lot of focus on, the core custody system, which obviously is very important. But, just as you've seen in cybersecurity, where you have breaches or breaks that are based off of, a failure of a process or social engineering or some other, not, strictly technical focus, we try to kind of look at each kind of the components of risk in totality, individually, and then kind of in totality across them and how they interact. And so, because it's such a nascent space, relatively speaking, certainly from an insurance perspective, you have to perhaps oversample a bit and kind of look at a broader source of potential risk metrics. And then, over time, as we develop more and more knowledge, we'll just say, okay, we know these are the, 10 or 15 things, although obviously there's been a massive improvement on the development front and security front, particularly on the technical side over the last, 5 years.
Thank you. And James, do you see any additional risks?
Sure. Yeah, I think, one of the entire premises and points of decentralization and asymmetric cryptography is the disintermediation, and therefore reliance upon the consumer and PKI and private key management, right? Which is obviously a conundrum in that custody becomes a very difficult problem to solve, since it's very difficult to remember a very long hash of random numbers and letters. So, in maintaining the essence of decentralization and that idea from a consumer perspective, it's extremely important that we figure out the proper compromises between user experience and security, such that the integrity of the philosophical nature of decentralization is maintained. And so, outside of that, you have these applications built upon, layer one networks and such, which require integration, and code is written by human, and there's bugs in code, and those bugs are exploitable, of course. So, because of the rapid development of everything in the space, and, the land grab for, value and creating these communications networks, there's going to be naturally a lot of vulnerabilities. And, embedding trustlessness in these systems is, after all, the goal. and that becomes very difficult at the rate of development which people are pressured to be, developing at. And because it's such a global phenomenon, you have people working together from all corners of the globe trying to solve problems independently, and oftentimes coordination around standards and not interoperability protocols, whether it be related to just the communications networks themselves or digital identity, becomes a huge challenge. Not to mention bridging private and public networks and all of the infrastructure development that has to take place for this to function in a borderless fashion. So many things to discuss in that vein, I think.
Absolutely. Thank you. And Jyoti, do you have any concerns to add?
Yes, absolutely. And in fact, we have gotten such various answers. From our perspective, the blockchain landscape is still quite fragmentary when it comes to standards and guidance, with respect to DLT specific security standards. So even though there are cybersecurity frameworks, from numerous standards bodies that apply to traditional IT, there are still gaps, in between, what cybersecurity can solve for to mitigate, and then what is blockchain specific. So there are many security principles that do overlap, but there are still gaps that are widely apparent. From our perspective, some of the key challenges that we have seen, to implement blockchain effectively is first an understanding of the security threats of the landscape, the vulnerabilities and the risks associated with the nature of the DLT systems, about having to deal with the unknown unknowns, the impact it has on, the concept of decentralization itself, because everything is so, global, like everyone said, it's so spread out. And at the same time, there are no clear security guidelines and best practices yet that are standardized that could be applied to DLT systems across. So these are some of the key challenges that we have seen so far from our perspective.
Brilliant, thank you. Well, that was a fantastic summary, I think, of the risks and concerns that we have, ranging from operations, fiscal security, natural disasters, decentralization and reliance on the consumer, humans, and fragmented standards. I think that, sets the stage very well for our conversation. So moving on to the obvious next question, I think, what progress has been made to date to address the aforementioned concerns? James, would you like to address that first?
Sure. I think, there has been significant development in custodial solutions for sure. Obviously, on the institutional side, for any institution to be able to invest in digital assets, there needs to be a level of assurance that, should match the traditional capital markets infrastructure, if not exceed it, right? Because they just simply cannot afford to take that risk. And, obviously Jay can speak better to the insurance requirements generally necessary for an institution to feel comfortable taking risk, of course. That said, I think, there's been significant development in UX and identification procedures and KYC and AML improvements, leveraging biometrics with a mobile forward approach. That said, of course, there's still many holes that need to be filled, especially because a lot of these applications truly are decentralized, and simply identifying the user becomes a significant problem. And as we know, many of these protocols are, pseudo-anonymous or aim to be completely anonymous in the effort to maintain individual privacy and sovereignty. So figuring out the right compromises between transparency and privacy on the consumer as well as the institutional side, both on the supply and demand side, are very important, I think, to everybody. But those things are going to take time to develop, especially when the world is taking a working code first approach. So many mistakes will be made, but ensuring that, we can account for the assets, for example, as if they're being used as collateral in a DeFi application, and ensuring that there's enough visibility to account for them is critical for people to have trust in the system, whether it's a centralized or a decentralized exchange or an institutional grade exchange. So I think that, there's been a lot of developments in terms of cooperations between all of these pieces of infrastructure, but it remains to be seen how that infrastructure will be best applied at scale for the mainstream audience. And so I think there's still much work to be done without sacrificing the philosophical underpinnings of, decentralization itself.
Absolutely. Jyoti, what progress have you seen?
So I'm going to tag up on James' answer with respect to a lot of work needs to be done. And that's exactly where we are. We started off by putting out a white paper in early 2020 as a call to action to the financial services industry. The white paper is called Security of DLT Networks, following upon which we rolled out multiple working groups with an initiative of building DLT security framework. And we participate and work with our alliances and consortiums, GBBC being one of them, to contribute towards security research. And all of the artifacts and deliverables we build as part of this research ultimately roll up and contribute towards implementing DLT security framework. One of the complexities that we see with blockchain is that every platform and protocol comes with its own technology stack, and each technology stack has its own set of vulnerabilities again. So it's an incremental process. And what we need to strive towards is to be able to build specific controls, one, to identify, reduce, and eliminate these threats that place the networks at risk. So development of the tools and techniques to secure and obviously to continuously monitor once the applications have been deployed is also a requirement. So that's something that we have been working on and striving aggressively towards producing results.
Perfect, thank you. Jay, where's the progress been, do you think?
So, there's a lot of issues, trying to build a generic kind of insurance product. And so, we've, both Jay and Jyoti kind of hit on two things that are near and dear to our heart. So, certifications, we do have a certification program where different custody platforms will basically be reviewed for insurability. And our hope is that as we kind of develop and evolve the underwriting framework, insurance will do what it's pretty much done for every other industry, which is enforce kind of standardization, professionalization, maturation, and risk reduction. And we've always taken a protocol and chain agnostic approach to insurance, which is why we've which is a challenge to kind of echo some of the travails that DTCC saw. But ultimately, we think this will help bring along the insurance industry. And right now, insurance for crypto is kind of a barren wasteland. There's, call it $6 billion of coverage and, call it a $2 trillion market cap. And that number has been relatively static. We should be bringing in some more capacity and bringing it online. But fundamentally, it is an unsolved, piece of core infrastructure that, again, really requires the industry to take a crypto blockchain focused approach on. And a lot of what you see out there and a lot of what you read in the news is, let's say, marketing in a lot of respects or won't work. It won't work because it won't work for participants that are trying to get into the space, such as, regulated entities or, kind of creating a path for broader retail adoption or kind of making regulators more comfortable, which is something that insurance has typically done. But a lot of the things that are out there, including a lot of the DeFi solutions, just don't work at a very fundamental level from an actuarial level. So, for whatever reason, the infrastructure development on the insurance side has actually been somewhat stagnant. But I am glad to see that, through a lot of the efforts of us, there should be fairly significant capacity coming online over the next, call it 12 months for the space.
Thank you, Jay. And Nikos, what are your thoughts?
Well, from my perspective, I think the public blockchain side is an important part of it, because there has been an early capitalization because of the coins and the valuations of those ecosystems. And I think we see a lot of that turning into infrastructure investment. I think the protocol teams, the foundations realize that they need to start serving their communities by building infrastructure and encouraging projects that build that infrastructure. On top of that, we have venture capital pouring more money on building, on helping companies kind of help in that direction. So I think on the public blockchain side, we see more and more tools that are being put in the hands of the community that can help them mitigate some of the risks, whether it is wallets, it is partnerships, it's monitoring systems, it's infrastructure. There is tooling that is being built in that. And I think the community plays a very significant role, which is underplayed, I think, on the private side, but on the public side, it's very center. It's at the center of the discussion. I think Web3 decentralization needs to take into account the community and serve those needs. On the private blockchain side, I see financial institutions and enterprises realizing that they cannot just use the Web2 tools that they have been using traditionally to counter all the risks in their traditional business, but they need to start looking outside. And you see lots of them either investing in companies in the Web3 world or partnering with them or assessing vendors in that direction. So I think we start seeing that there is infrastructure that is being built on the public blockchain side, and then enterprises and traditional finance more and more look for that infrastructure that takes them a step further in running their operations or mitigating risks and leveraging that kind of tools that are being built in the crypto world. As I've mentioned before, I think one of the main things in the blockchain world is somehow this early capitalization has created the use cases before the infrastructure has been put in place. So I think we are all trying to catch up and build the tools that will allow blockchain to get to the next level and more applications to be built, and that ecosystem to kind of foster above and beyond just kind of the tokens and the coins as a use case.
Absolutely, thank you. Jyoti, I know we've answered this question a little bit, but how are companies leveraging new tools and data to mitigate the risks?
So I'll take a slightly different approach from what Nikos has mentioned. My understanding is that it requires, no technology is without risk, right? And that includes blockchain. And for long-term sustainability, for any implementation to succeed, is first we need to recognize the risk, be able to quantify that risk, and then manage the risk such that either it is mitigated completely or it comes to an acceptable level. So if you take a structured approach and then break it down, of course, there are, from a business perspective, there are financial and strategic risks, but from technology and operations perspective, we see security, integration and interoperability and performance risks. From an operational standpoint, we see governance and auditability risks. From, of course, because we are a financial services industry, from a legal and regulatory standpoint, we see that developing standards and not having mature, solidified legal guidance is also a risk. So we lean towards some of the tools that have been produced by, World Economic Forum or some of the other vendors that we work with that are developing these risks, but there are no mature, solid tools and frameworks to give us that guidance. But take a different approach, from implementing a blockchain or any technology from that perspective and break it down into what is the true business impact. And that's how we address it.
Okay, thank you. And Jay, do you have anything to add to that question of how companies leveraging new tools and data?
Yeah, I think, look, there's obviously a lot of information out there. I think, particularly for an environment as complex as this, there is definitely going to be a maturation of tooling that will hopefully, from a UX UX standpoint, improve things for kind of the retail customer. But we are seeing kind of more tooling coming online in terms of testing tools, development tools, and we're also hoping that there'll be some standardization efforts around kind of core code, particularly smart contracts, given some of the issues that you've seen with them.
Thank you. James, moving on, how can organizations prepare for some of the new risks posed by the use or introduction of blockchain?
I think, being very deliberate about where they are at specific points in time with respect to their needs. Obviously, I'm mostly invested in personal custody of digital assets. Again, that being the essence of asymmetric cryptography. And so, focusing on the consumer and enabling a rather seamless experience for the user to be able to, on-ramp, maintain custody, exchange digital assets, not just ones that represent monetary value, but also those related to your personal identity, I think are very important as well. And, a bit of a shameless plug here for the company that I work for, Tangem, in that, there's a limited number of ways by which a consumer can really have that power in their hands and be able to maintain their own keys. And again, the entire point of this disintermediation and public permissionless networks is to be able to send a payment or a remittance, or prove your ownership of digital assets. And so, being able to simply and even physically maintain your keys in your hands and understand what that means is very important. So I think, first of all, there's a massive steep education curve in terms of, how someone interacts with a blockchain or a DLT platform. And so, as far as, and of course I work on, the business to business and partnership side. So I'm focused very specifically on this. I think that, institutions need to understand where these vulnerabilities are. And, it's not just software, it's hardware as well. I mean, we've had many instances in the past, if you guys are familiar with the Huawei incident several years ago, where the FBI had learned that there was compromised hardware in millions of smartphones distributed throughout the world. It's very easy, and there's so many attack vectors that need to be considered that, you literally can't trust any single component, whether it be software or hardware. And so, I think that, there's certainly pioneers in developing new methodologies, including multi-party compute and sharding keys on an institutional level, as well as having these, independent secure elements where asymmetric cryptography is performed inside of a secure element that is extremely unique and, open source to the maximum extent. So I think, people really just need to understand where those vulnerabilities in tax services are and do their best to account for them, knowing that the code itself underlying all of this is a huge vulnerability. So just being very careful with what platforms you interact with, myself having been a victim on, one occasion, at least. So I think, there's a lot to be said for developing these things, understanding where the vulnerabilities are, because with each improvement in security, there's some nefarious actor somewhere looking for that next vulnerability, right? So there's always this tension between security and usability and someone that's threatening those things.
Thank you. Nikos, are there operational considerations that companies should be thinking about?
Definitely there are. I think the bigger realization is that when you are part of a blockchain network, you're not running operations in a standalone fashion. You are part of an operational community, and you have to coordinate with other members that are running operations on that same network. So if you're running nodes, you're part of an operational, there is some operational governance, there is some community, you need visibility. So I think there is a certain risk by not having the right tools, by having the wrong processes and not the expertise. Take, for example, a typical example I use is that there was an Infura outage, one of the node hosting providers a year ago, and the applications running on top of Infura could not realize that the rest of the Ethereum network was moving on. And they were dependent on a single vendor in that world, thinking that they had an outage. So I think an understanding of the level of visibility you need, where you're participating, how you're accessing things. And I know we talked with James and Jyoti about that, but I think as we decentralize more and we put the infrastructure in place and allow people to run operations, that comes also with an understanding of what's your responsibility of being part of that decentralized world. And I know the protocol teams are now have rewards for operational excellence. They might slash your rewards if you're not running properly your infrastructure. There are incentives in place that take that into account. And one advice that I have, which goes to kind of the previous question, is companies who want to start doing work in blockchain, I think they should kind of first get their hands dirty with the blockchain networks and participate, and then go back and select the right vendors in that space, because that will give them an understanding of the complexity and not kind of make a leap from Web 2 into Web 3 without understanding what that means. I think that responsibility needs to be gained, and they need to have the right framework and the right understanding of the space.
Absolutely. Jay, what does the current insurance landscape look like for digital assets?
Yeah, so as I mentioned earlier, it's very nascent. For a variety of reasons, the incumbent insurance industry isn't particularly keen on the space. And it's really up to kind of the crypto industry to build solutions for it, as we have with all the other pieces of infrastructure. To date, the only meaningful contribution on that front has actually been from Evertas. And you see that with, again, the limited capacity that's out there. Ultimately, insurance is a very boring, very obfuscated, very esoteric kind of industry that's opaque even to the people who are in it. So I completely understand why most people in the world don't even want to think about it. But unfortunately, if you actually want to have mature infrastructure, and that's not even just financial infrastructure, but any infrastructure, you do need to have a viable and functional insurance market. When we think about risk as the topics we've talked about here, if you think about certification, standardization, getting kind of consistent tooling and getting reliability, you get all of that out of an insurance market for an industry. You're going to get greater customer confidence. So people look for insurance typically as a mark of quality. I mean, you can, whether it's Underwriters Laboratory doing consumer safety, or the Insurance Institute's doing automotive safety in the States, that's always been kind of a driver. And then I think from an adoption standpoint, we know of many deals that honestly didn't go through because people were regulated or had risk committees, and when they started doing their due diligence, there was no insurance. It kind of ground everything to a halt. Insurance also, I know this has been a hot topic, particularly in the States, but I'd say globally as well, has really been a way to, quite frankly, get regulators off of an industry's back, because insurers take on fairly substantial financial risk, and as a result, they're much more incentivized to create up-to-date, relevant standards and processes that will support reduced risk reduction within an industry, but also allow the industry to function, because you have to obviously balance people making money, because if there's no industry, there's nothing to insure, but also make sure that it's done in a safe and responsible manner. The insurance industry has always been more agile, more adept at this than regulators, which is why frequently regulators will require insurance So I think that over the next year, you're going to see a lot of developments coming out of Evertas, and which is most of the insurance industry, progress that's being made for crypto. And I think that that's going to have a really ameliorative effect on kind of all these points in terms of standardization, risk reduction, and I think allowing regulators to be much more comfortable in the space, which should hopefully allow everyone to kind of grow.
Thank you. We've got 5 minutes left, and I've got a few questions I'd like to get through. So very quickly, Jyoti, within the context of post-trade infrastructure, what are the primary considerations or core principles companies need to consider when implementing blockchain as part of their core infrastructure?
Some of the challenges when it comes to implementing blockchain in post-trade infrastructure or financial services industry is that it has to navigate across through a complex web of regulation and then intermediation with legacy systems. So today's systems are quite complex and they've evolved over a course of decades, right? So some of the key considerations that we see is one, being able to have the technical, legal, and regulatory environments must need to be refined to ensure, financial assets and securities are, safe, the safe custody is ensured. And the second thing is standards. Standards are very, very important critical criteria that needs to be developed across various independent blockchain networks. First thing, they need to be able to interoperate with one another as well as with the legacy financial infrastructure. And for this to happen, we need common messaging standards and enhanced security assessments and standards. Basically developing standards is what will help accelerate the adoption and implementation within financial services industry.
Thank you. I know we need to wrap up shortly, but James, could I ask you, what role can government and regulators play in ensuring that innovation in the blockchain and digital asset space is mindful of risk and security?
Yeah, that's a big one. I think the most important thing is coordination on standards, right? And we should be very grateful to the Global Blockchain Business Council for doing everything that they can to ensure that information is readily available and distributed so that people, have that information at their fingertips and understand that there's urgency around developing these standards before things get too chaotic. Obviously, they're already moving, at the speed of light. And so I think just coordination on a global policy perspective is extremely important. And, we see it within the United States itself, right? We have our own regulatory and enforcement agencies trying to figure out who's responsible for what, since these are all frontier technologies, and I imagine it's no better everywhere else in the world. That said, in that context, it's the nature of this stuff is that it is intended to be borderless, and the greatest efficiencies and economic growth will come from things like remittances, where people are paying 7 to 10% on a remittance, per transaction. And these are the most vulnerable populations in the world, right? So, there's obvious need for this. We are, at the whims of these governments and jurisdictional and regulatory and enforcement bodies to a large extent. And there's many conflicts of interest that are naturally embedded in the incumbency and the systems and traditional processes that we have to work with. And I think there's going to be a lot of required education and enthusiasm by the consumer for people to change their behaviors and start moving in that direction. But it's an absolute requirement for these things to function properly.
Absolutely. Well, thank you so much to all of the panelists today, and to the audience, and of course to GBBC for organising this fantastic couple of days of panels and talks. I believe the next panel will be looking at regulation in further detail, so I think that'll be a great conversation, so do stay on. Thank you and goodbye.